Let's just start with REITs. Why do you like real estate investment trusts?
Well, right now you're going to be dealing with a very low interest rate for a very long period of time, and it's very hard to get high levels of income. So if you think about what's going to happen in a variety of sectors, whether it be digital infrastructure or whether it be warehousing, there are plenty of places where you can get both growth of income and income. And then there are certain areas in the residential area and residential mortgages which are still beaten down, and they'll provide both income and a high level of appreciation. And I think that clients probably underestimate the value of income in their portfolios right now, and I think we want them to have some exposure there in lieu of bonds.
Well, you have three trends for 2021. We've only got a couple of minutes, so let's try and run through this quickly. First up, you think that ESG investing is going to be a really big deal this year.
It is, because we've seen 4 times the amount of investments go into ESG. And so companies that are going to benefit from climate change, benefit from carbon neutrality, and benefit from the technologies that will provide them, including electrification of cars and the heating and air conditioning of homes, all of those things I think are going to be big trends in 2021 and 2022.
You also like the companies that you call hyper-connectivity enablers. I guess those are the companies for cloud computing and beyond?
Right. And also remember the ability to make robotics go, the ability to actually take and automate everything that's taking place, the Internet of Things in our individual homes, as well as in industrial situations. There are lots of people who benefit along that supply chain, and we think that's going to be a very exponential growth area over the next 4 years, 4 times the amount of spending in that area over just 4 years.
What about the dividend-paying companies? Why do you think that this is going to be a trend this year?
Right. So this has been, I think, the biggest surprise, right? Technology has done great. But when you look back over the last 20 years, half of all of the gains in the market have been reinvestment of dividends. And dividend stocks for the last 18 months have done terribly. So what you have to do is identify the dividend payers where earnings are going to grow and where dividends are going to grow. And banks, insurance companies, and certain healthcare companies, ironically, present those opportunities. So what you've touched upon is there are all of these different areas where the market is not expensive and where clients should be putting money now. And that's really why we're excited about the market for the next year.
Shepard Smith here. Thanks for watching CNBC on YouTube.